Hello, it's Russell Markham here from VectorVest. ETFs rising in a falling market. Yes, there are ETFs that will go up. They're designed to go up when the market is falling. And with the current turbulence in the market, now as of time recording here, we're in March of 2025. There's been a fair bit of turbulence to the start of March as the market's been sold down. What if I could show you an ETF that goes up, or at least designed to go up when the market's falling, and we track several of these at VectorVest. But before we do that today, let's just move myself out the way, and let's just note the disclaimer. There are license numbers, and in addition, please note, general advice only. I cannot advise you personally. Past performance is no guarantee of future results. Right, so let me move my mouse over here and just grab this screenshot here. Okay, so the screenshot here is a market timing indicator offered by VectorVest. I'm not going to get into all the detail behind it. If you want to take out a trial, we provide brilliant training. We make it really easy to do. This is what we refer to as our market timing indicator. And as of the 24th of February 2025, we had an indicator called the DEW. It's a special timing signal there, noted for us to be careful to stay out of the market. So, what could we have done? And in VectorVest here, we track all sorts of ETFs each and every day. I want to point out one ETF to you. This one here entitled SNAS, Global X Ultra Short NASDAQ. So it's designed to basically short the NASDAQ in the US market there, and offered via the ASX. So you don't have to go to the NASDAQ. You get it right here, brought to you on the ASX, as designed to do effectively the inverse of what the NASDAQ is doing in the US. So as the US is getting sold down, those shares on the NASDAQ on average are falling. And if those shares continue to fall, then this ETF is designed effectively to do the inverse. Now again, I cannot advise you personally. I don't know whether this is suitable for you or not. So I need to make that clear. This is not advice, but this is just one such ETF out there. So if I go and have a look at this ETF, and let's just graph it. And what I'm going to do here, when I bring the graph over, I'm just going to bring it in until just the last couple of days here. Okay, so I'll bring it over. And to begin with, I've got all this wonderful functionality in VectorVest. Don't worry about all this additional stuff. There's the price. And you can see here, as of around about the 26th, 27th of February, look how this ETF rocketed up in price. You know, it went from around about $22 up to over $28. And we've got this momentum indicator in VectorVest called relative timing. You can see it's on a scale of 0 to 2, and as relative timing breaks above 1 and rises, it tells us that there's momentum to the upside taking place. Now, what I'm going to go and do here, remember that graph that I showed you right at the start, our market timing indicator. We can see that the market started to roll over on the 24th of February. So the average of all the stocks we track in VectorVest Australia started to fall away. Now, if I go back here and have a look at this ETF, this one here, it's known as a contra ETF, as we refer to it in VectorVest. It does contrary to what the market's doing, in this particular case, the NASDAQ. So the NASDAQ's going down, then it's designed to do the contrary to it, the inverse. So as the NASDAQ goes down, then SNAS is designed to basically short, and along with other instruments, the NASDAQ and benefit from it. So you can see the exact same indicator here on the 24th of February 2025. There was the signal. So for a contra ETF like SNAS, for example, as the market falls away, then look what's happening. It's going up in price. And again, I can't advise you personally. I can't give you personal advice on this. You need to speak to your advisor. But in this particular case here, as the market went down, it rocketed up quite nicely. So I've got a very interesting graph to show you here, and I'll bring this across. So there is SNAS as of the 24th of February, per that graph we showed you when the market was falling away. So what typically happens to standard stocks out there, we all know Commonwealth Bank of Australia, CBA, along with many other big blue chip stocks. Typically when the market rolls over, your big blue chip shares, along with other such shares, fall away in price. So you can see here, CBA went from, what was it? Let's look at the price here, 156, and it's fallen all the way to 144 and falling. So, and there you go. If If you had held on to CBA, the price fell away. Conversely, if you had bought SNAS when the market was falling away, you can see it went from, where was the price there? Went from $22 odd up to $28. So it's just something to consider. When you're building your portfolios, you might want to look at some of these inverse ETFs designed effectively to go up when the market goes down. Now, if you want to find out some more information on it, take out a trial of VectorVest. We do a lot of analysis on these contra ETFs, and we can give you many, many more. I've just picked out one here. We analyze them for Australia. We analyze them for the US. We analyze them for Europe as well as Canada. So take out a trial, see what you think. Have you ever considered some of these inverse ETFs? Let us know there in the comments there. Hope you got a lot out of this presentation. Until next time, bye for now.